Welcome to Wall Street Confidential. I'm Aaron Task, joined as always by Jim Cramer.
Happy
Jim,
New Year,
Happy
man.
New Year. Thanks for being here.
Sure.
So we're off to the races here to start 2007 as far as the stock market is concerned. Is this a typical beginning to a year? You would think that a lot of people would be looking to sell for tax purposes, perhaps?
Well, I think the most interesting trend here is that, and I think people forget this, finance, drugs, and tech all did not have good enough years versus a lot of other groups. We tend to think that those are just consistent performers, but a lot of them really stayed the same. So I see a lot of money coming into those, particularly because they had a bad last 10 days. And the money's just flowing out of oil to the point of my thinking that people really are believing that global warming is here and it's never going to get cold again.
Right, and it's kind of warm here on the East Coast, and that's so people's mindset is it's warm, it's always going to be warm.
If we had flipped it and Denver had gotten our weather and we had gotten Denver's weather, I think that you'd see a whole different pattern.
Right. In terms of tech, though, you'd written earlier this morning about Goldman Sachs downgrading some tech stocks,
right,
and that January is often a tough time to own the sector. Is that going to be flipped this year because of this phenomenon of its lag last year?
I was chatting offline with the Goldman Sachs people in research, just saying, had you waited a day, you would have had the home run call. But the truth is that you have to get the jump on. January has been a bad time to own tech, and one of the reasons why it is bad is that you get the last good quarter announced in 2 weeks. And I think that what Laura Conigliaro is doing is just relying on, she's the Goldman Sachs hardware, relying on the past to say, I want to be out ahead of that, be able to downgrade again, be able to upgrade again when everyone else downgrades, which is probably going to be in first, 4 weeks. The one thing that I would say, and I quibble with the call, is that we finally have a catalyst in Vista.
Vista, right.
So let's say you're Best Buy, or your Office Depot. These places advertise like mad, Office Depot, Staples, Office Max. They have not gotten behind PCs in 4 years. So suddenly you have this tremendous marketing surge that I think that Laura's underestimated, which is that these companies which have been behind big screen TVs where there's very little money made are now going to shift all their ad dollars toward PCs. That will get people purchasing. So I think it's a bad call, frankly.
Interesting. So moving on, one of the names that's moving the Dow today, obviously, is Home Depot. It's up on the news. Bob Nardelli's out as CEO. I know you've been calling for his ouster for a long time, very publicly. And
it's tough to call him a bum. I actually like him personally. And you're going to hear, there's a lot of disinformation. Like one guy I heard this morning say, he really had good relationships with the actual stores. That's totally untrue. I'm actually in touch with a tremendous number of Home Depot workers and people who run stores, and they just thought he was just awful. Secondly, what people are saying, well, now it's a real target for the LBOs. And that also is completely untrue. They have to fix it. Now, it's too big for an LBO firm to fix it. It's too dicey.
Is there anything too big for LBO? Because that seems to speculation that everything can be LBO.
I think that's nonsense. I think that you don't want to LBO. You would LBO Sears before you would LBO, and I own that fractionalersplus.com, but you would LBO Sears before you do Home Depot, because one is just not that big. Sears is kind of tiny. Home Depot is very large. The main thing about Home Depot is it was being run as a financial company by Nardelli, who was a financial guy. Let's boost the dividend. Let's buy back stock. Let's starve the stores. In a competitive market where Lowe's and Costco are much more fun to go to, and don't forget, Home Depot stopped reporting comparable stores numbers. Usually don't do that if they're on fire. I think more money has to be poured into the stores and marketing beyond just the ESPN Home Depot logo everywhere. And I think that there had been no marketing and no merchandising of any flair under Nardelli, who was flat. Merchandising is an art. They didn't have it.
Right. And you wrote in the site today about Home Depot, sell it and buy it back later at a lower price.
Yeah, look, numbers are probably too high. I also feel that there had been, for 6 straight points, speculation that Nardelli would go or private equity would come in. I find that when you bet like that, witness the fact that Neighbors is down a lot, betting that there's a lot of hot money in there, betting private equity money come in. You better have a real good convincing story away from private equity if you're going to start rumoring that stuff.
Okay, and while we're on the subject of retail, Walmart, another name boosting the Dow today.
That is just such a sell. That
answers that question. Okay.
There's so many companies out there that people say, they were down a lot last year, I'm going to buy them. Walmart today announces still one more initiative, which is to shaft workers, as if shafting, well, I call it shafting because it's time shifting, as if the problem has been the bottom line. It's the top line at Walmart. No one wants to shop there. Now you're going to have these beleaguered sales execs who make $10 an hour, who frankly frankly cannot compete with Costco and cannot compete with Lowe's, cannot compete with Target, with Best Buy, and you're asking them to work even harder, and all you're going to do is create an atmosphere where you're going to go into virtually a bombed-out store with people who can't help you to buy expensive things or ugly clothes. That's not the recipe. Again, under-investing in the stores and trying to save bottom line is not the way to save a retailer.
Okay, so I would imagine them be selling Walmart as well.
9 ways to Sunday. I mean, Target was up just as little as Walmart last year. I would rather own Target. But what I really would focus on, again, is if I'm going to buy these, I'd rather be in apparel, but be careful because there's apparel companies, if they have warm winter apparel, obviously not selling, but the other apparel companies I think are pretty good. I also saw an upgrade today at Pacific Sun. I think that's a turnaround. I've not liked that company in a long time. Fun place to shop, though.
Okay, interesting. And while we're here, neither of us was here last week, so I want to do a little look back at 2006. Obviously, ended up being a blockbuster year.
Yes.
Not a lot of people expected that, but you did a year ago.
Yeah.
You forecast 12,470 in the Dow, 7 points off, which is very close.
Some of the makeup wasn't right. I thought that GM would be bad. It was bad. Then it reversed. I didn't think that Verizon AT&T would be stellar. I noticed that Verizon's up again today. That's a stock that I really urge people to look at, not as a when I look at Dow stocks. AT&T and Verizon are too often viewed as being zero sum versus Comcast. These guys are all doing well, but Verizon's doing well in wireless. Comcast is doing well in cable. If Verizon were ever to make some real points in studio, home studio, whatever that's my word for it, but convergence, you'd really have a very big stock.
Interesting. And your forecast for 2007, up 17%. So you don't worry that people talking about we're at this bull rally is long in the tooth, and we've had 4 good up years, and it's unusual to have another good up year.
I worry about not being bullish enough. I think that there are not enough people who are. I think that the 2000-2001 period created an atmosphere where everyone is always worried to be too bullish. I think that the lesson of last year was that the worry should be that you're not bullish enough, because you got to counteract all these people who are predicting just slightly better than the cash rates. Inflation low, profits high, dollar low, Fed could cut. I mean, these are all the things that I've always dreamed of happening at one point in my career. They're happening. So far be it from me to say, well, I want to be really careful. I don't. I think careful could be reckless here.
Right, but would you expect all those things to happen after a year, which according to Lipper, 51 of their 62 equity fund categories were up more than 10%?
Well, we used to have let's go back to 91 to 1999. I mean, you just had sustained growth, and what happened in those periods? You would have like a long-term capital debacle, or you'd have a Mexican debacle, San Diego, your Asian contagion. And your hope, frankly, is that you get one of those this year so you can buy it cheaply. The other thing I would point is that, we had 2 inflection points last year, May and July, where the market was quite bad. It was kind of a dichotomous market. There was a first half that was really abysmal, and the second half that came on strong. I think the second half has carryover, and that the way to look at this market is that we've been pretty good now for 5 months. So maybe we have a good year. Year over year. Don't look at it as calendar. Look at it as almost like these companies have fiscal years that start in July. That July was really when we took off. And I think there's still enough momentum from the July period to carry through for another 6-7 months. Okay,
and again, your forecast for 2007 is 14,548 for the Dow. And you can read all about Jim's forecast for each of the Dow components at thestreet.com.
Remember, no one is saying I am worried about being
too bullish.
Right. And I think that when you had that, what I like to look at is the consensus is not bullish enough. And so people say, the consensus is so positive, I got to bet against it. I think it's the opposite. The consensus is tepidly positive. I just don't see a lot of wild-eyed bulls. Wild-eyed, obviously, pejorative term. Call me wild-eyed.
All right. Wild-eyed Jim Cramer, thanks very much.
Thank you.
I'm Aaron Task. Stay tuned for more of TheStreet.com TV.